what happened when Bear Stearns went under and then Lehman. The tide went out. We saw it was wearing clothes. To me, that's the problem right now. It's great. The tide's nice and high. It's great. But and you mentioned commercial estate. I just look at things like even residential. Everything's great, and we all see how our home builders are doing well lately. But if you thing that really struck me, if you look at new homes, new U.S. homes owned under construction, it's the highest ever in this country, and it's bumps up recently. You go back to 1970 on this database. It's never been higher, and then sales are collapsing. Yield or interest rates are going up. This is a complete recipe for a severe recession. It's just the way it always works, and that's residential.
Bloomberg's chief commodity strategist, Mike McGlone, took to Twitter to share some of his analysis of Bitcoin and the factors that are likely to prevent its further growth toward $40,000. McGlone mentioned several bullish drivers that allowed the flagship cryptocurrency to recapture the $30,000 level and are holding Bitcoin there at the moment. Among those are the federal funds futures, the Fed, the NASDAQ Composite Index rising, and the potential launch of several Bitcoin ETF, including BlackRock. Still, the expert wrote, there are bearish factors that are likely to overcome the bullish ones and may create headwinds for Bitcoin's further rise toward the $40,000 price level. What Bitcoin is likely to face soon, McGlone believes, is a potential bear market of equities and vigilant central banks. McGlone has been attacked by several crypto enthusiasts as being bearish and pessimistic about the future of Bitcoin, to which Mike replied that he is not a believer in hoping, but he prefers facts. Mike also commented that he doesn't deny the growth of Bitcoin, but he has to see the king of digital assets survive the onslaught that is coming in the next few days and weeks. Let us now get into the video and listen to what Mike McGlone has to say about the recession and how Bitcoin survives this. He also gives his macro outlook on the debt spiral and global supply and demand.
The macro is just, if you saw what we all saw what he said last week. We saw what he did, the Bank of England, the Bank of Canada. I mean, this is a classic historical case of the rug pull and liquidity. Now, I have to admit, this weekend I went back and read about 100 years more of history of the crashes, and almost every single time it just reiterates my views. First of all, you pump things too much, and then you dump things too much. And then, so we have to be hoping, let's see, to be bullish Bitcoin here, obviously we have to hope for that ETF soon. Okay, maybe we'll get that. We have to hope for the stock market, bull market to continue. Maybe we'll get that, but I fully expect a recession soon. That's just not my view. Look at commodities are collapsing. Look at the inverted yield curve. It's doing it more today. You've seen the 10-year note yield ticking down this morning. And it's just the bottom line of liquidity. The Fed is still pulling that, still raising rates, pulling that liquidity. So the macro is very poor, and I don't like to be bullish on hoping, I like to be bullish on facts. So I think what's going to happen, my base case is we're going to tilt back into this normal bear market for a typical recession where stock market goes down. I'm sorry to say that's just the way it's usually happened in history. People just forget what happened the last 10 years. They have been able to buy every dip when the Fed was there. That's what Chairman Powell said last week. He said, we're not going to be there. We're raising rates, yet we know there's a lot of signs of slowing down. And there's no sign of that, of cutting rates. It's not just the Fed. It's virtually every central bank with the exception of one key one, China. China's a country that backed Russia. Well, the unlimited friendship, we all know that's failing. So I see this is, I'll end with this. To me, these are all the iterations of part of what I see as a significant economic reset. By the end of this year, it's going to come clear. And if Bitcoin can get out of this and beat an equity market on the way up, that would be great. If it can beat an equity market on the way down, that would be even better. I think that's where we're going in the long term. But right now, I see it as gold and long bonds are the most likely to do well. Now, just look at crude oil. It's back down again this morning, even after this issue with Russia over the weekend. And here's my outlook. I think that we're far from a low in the stock market. Just like I said in the commodity market a year ago, we are far from a low in the commodity market. A key question I ask people is, what stops this bear market? Now, this is a bear market in commodities. And it's a bull market in the stock market. That's very rare. Unless we have a big deflation environment, the Fed's easing, everything's fine. They're not doing that. So to me, everything's going to tilt over that way. And then the question is, what stops it? So I think we're going to be at a point where in the near future, maybe it's 12 months, maybe it's 6 months, we're going to, the whole consensus that the worst is over and the stock market's going to get a good reality check that you too have traded in your lifetimes where, yes, there's periods where stock markets make highs and they don't make that a high again for another 15 years. NASDAQ 2000. This is, and S&P 500. And then, of course, these things are, it's this, I've just gone back and keep testing my measure and my history of cycles. This cycle right now, the worst I've ever seen for a pump in liquidity and a dump. And also you put the narrative, and where I'm sure James is all over as a hedge fund guys. Okay, what's my value, risk adjusted value to put on the positions here? Now this NASDAQ has completely told me we're going to break out. We've already done it, and it's different this time, and the stock market's going to keep going higher despite the Fed tightening. It's already done it, a lot of it. So what's my value versus maybe the pendulum just swings back towards the bear market? To me, that's what's going to start. Yes, I've been early, I've been late, I've been wrong, but there's a lot of indications it just has to drive people crazy and then eventually go that way.
During the recent FOMC meeting, officials indicated that they expect the Fed to make several rate hikes this year again, contrary to the hopes of the crypto community that there will be none. As for the Bitcoin ETF filed for by BlackRock, McGlone believes that if it does get approved, the launch may not even take place this year. But a recession is expected within the upcoming months already, and it may hit Bitcoin. McGlone remains bullish on Bitcoin, but he remains cautious as to the path Bitcoin will take in the coming months when riddled by recession woes.
I've never seen a period where I've seen the Fed this adamant and seem this happy and this much battling the stock market. Every time the stock market goes up, the rate hike expectations go higher, where they seem satisfied if the stock market goes down. I've never seen that. So sure, maybe if you get a quick crash, they might save us again. But I look at Fed fund futures right now. We're at about 90% that they're going to be up at 5.3% by November, and then by next year they're going to drop 100 basis points. Now, what's going to take that for happen? Inflation going down? Yeah, who cares? If the stock market goes down, I look at it. I wrote about this recently. There's no reason for the Fed to do anything until the stock market makes them. That's the problem. Now, I just want to point out, we mentioned BitTo. I'll just turn a little bit. If you want to see a good island bottom chart and something that's Bitcoin related, GBTC. Just spend a little more time here. Now, there's a nice chart. And I also look at that as if this ETF happens, we know that premium, that discount is still about 31%, pretty much is likely to go to zero, just a matter of time. So I look at it, risk reward. I can't make trade recommendations, but I can't trade either. I'm not allowed, which is probably keeps me neutral. Is that to me, there's a bottom formation to me. And that's also, it's got that, it can still ride out a 30% collapse. And still has the premium that can help support that price.
About this. So that's what we're talking about right there. Yep.
Yeah. I look at some of the smart money might be going in. And okay, now we knew it was wide at 50. Now it's maybe, is it still wide at 30? But there's a good solid reason for it to narrow, and particularly if, BlackRock helps. So obviously it's a big lag. We know that, but we've had a historic event, and there's no measure in history near. I mean, you can go back to the, 1919 great plague, but it's never happened before. The key point is, what are central banks doing? I look at it simplistically. Let's not complicate this. Bank of England surprise hike more than Bank of Canada surprise hike. Federal Reserve hiked the most ever from zero ever.
And
you
look
at
at
the
the
log
again,
normal
probably.
basis,
and we'll probably hike again.
So it's just simple. You're supposed to just say, okay, what's my 2-year note? 475. Thank you. See you in 2 years. I mean, that's what I look at it. Why complicate it?
Riot Platforms, one of the largest Bitcoin mining companies in the world, is set to boost its hash rate capacity to new heights after purchasing 33,280 mining rigs from MicroBT, a leading manufacturer of the machines needed to mine new coins. The application-specific integrated circuit, ASIC, order adds up to $162.9 million, making it a standout purchase even among the slew of similar investments from competing firms this year. The machines themselves, however, aren't scheduled for delivery until December 2023 and won't be deployed until the first quarter of 2024. Riot is excited to announce our first order of Bitcoin miners for our Corsicana facility from MicroBT, said Jason Le, CEO of Riot, in a press release. These new models are among the most powerful and efficient miners ever made for Bitcoin mining and are designed and produced specifically for immersion cooling systems. The ASIC models purchased by Riot include the M56S Plus and M56S Plus, the latter of which was released in late April. It boasts a power efficiency of 22 joules per terahash and a maximum hash rate of 230 terahashes per second. A hash is an attempt to answer the complex mathematical problems miners must solve to construct a new Bitcoin block. Mining machines consume energy generating as many guesses as possible to be the first to solve the problem and to mine the next block, which carries a current reward of 6.25 Bitcoin. 1 terahash is a trillion hashes, while 1 exahash is 1 quintillion hashes. Riot's latest purchase is set to bring its hash rate capacity up by 7.6 exahash per second to a total of 20.1 exahash per second across the company's facilities. The company has also secured an option to purchase an additional 66,560 M56 S++ miners under the same terms, which will be valid through the end of next year. If executed, Riot's hash rate capacity would increase to 35.4 exahash per second. This is bullish news for miners, and as the Bitcoin halving gets closer, so many activities are going on in the background to catch its wave up. Do you think Bitcoin will be unaffected by the recession? Let's know your thoughts in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.